I've been muted. I've been muted this entire time. My apologies. Guys, welcome. Welcome. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 12th, 2022, and my apologies. I was muted. I was giving the intro, I was talking, but nobody could hear me because my mic was muted. No worries. I was saying that nothing lasts forever, okay? We've been in a bear market. We've been in choppy price action for so long, you know? We talk about 130 days Bitcoin going sideways at this 19 to 20,000 level, okay? We can talk about altcoins going sideways for even longer, 150, 160 days, okay? But nothing lasts forever. There are few, if any, analysts, speculators that will tell you, oh yeah, it's just gonna go down and never gonna come back up, okay? Question is, when? This is what's so difficult. This is what we're racking our brains about, right? When? When is enough enough? When is it going to turn around? When am I going to finally see some green? When am I going to be profitable in my investments? That's what a lot of people are asking themselves, okay? And, once that finally happens, people are going to say, hey, how'd you get so lucky? How'd you get in at that price? This is how. You're engaged during the times where most people disengage. Most people are unsubscribing from my channel and other channels. Few people want to even hear about cryptocurrency, whether they're invested or not, especially when they're invested, because there's nothing interesting about it. Price is going sideways. Bears aren't happy, bulls aren't happy. And I know a lot of times people sign on to these things not because they want to learn about, any particular analysis, but they want to know up or down, or when moon. And if you get into the technicals, I don't really care about that. I just want to know, when are we going up? When are we going down? What do you think? Can you, support my biases or whatever? A lot of times, people tune in because you support their biases. If you're bullish, they're going to tune in to hear some bullish reasons or whatever. It doesn't, and there's nothing wrong with that. It's just, this is what we're dealing with. So, whether you're bullish or bearish, whether you think we're going to turn around today, tomorrow, or 50 million days from now, the fact that you're engaged and paying attention now means you're likely, more likely than not going to make it. Because this is exactly when people don't want to pay attention. That you're paying attention, right? And, people like myself showing up, doing analysis on a daily basis, I know I'm going to make it. It's not a question of if, it's a question of when. And basically all I've been doing is I've been telling you guys is fighting to keep my positions alive, right? Obviously my spot positions, they're going to be what they are. There's nothing threatening them. I'm talking about my leveraged positions, of which I have quite a few, okay? And just on the basis or on the topic of trying to determine when we'll turn around, I think the main answer to that is the DXY. Obviously, we can look at the crypto markets, we can look at individual charts and say, okay, this level seems to be a support level, that seems to be resistance, or whatever. That's one way to do it, okay? And there's nothing wrong about that. Like, I'm looking at Cardano right now, big position of mine. I'm very interested in this chart. I've decided that this looks to me like a consolidation reversal pattern, right? Especially this nice strong wick to the downside. That's an initial break of structure. You got a B wave, another A wave, another B wave, a pivot, okay? I'm looking for a move out of that. And if you zoom out, I'm looking for that to be, I'm looking for that to be the smaller move, which takes us up and out of this 150-day channel. Okay, so that's my take. Okay, but another way to do that is look at the DXY. Okay, we always say on this channel, the DXY is the market mover. The DXY is what determines what the market is doing. Okay, so let's have a look at the DXY. Hold up, let me, because there's a move happening right now. I'm just gonna have a look at this. Every corrective move ends in an impulsive way. Okay, so that's usually the signal that there's something ending if you're in correction, and we've been in correction for hundreds of days. So we've been in and out of correction, going from one correction to another, and just like that, just sort of going in and out of corrections, like three waves here, 3 waves there, 3 waves here, 3 waves there. But every time you get 3 waves, that third wave ends in, or that series of 3 waves, or that sort of a variation of 3 waves ends in an impulsive manner. So that's what I'm looking at right now. I'm looking at this impulse right here, and I'm saying, okay, this must be the 3 waves right here. 1, 2, 3. Okay, and that is a complement or a counter to these 3 waves. Okay, so I see 3 waves here, 3 waves here, 3 waves here, 3 waves here. That's 2 degrees of AB basing for me. I'm expecting that to be a concluded consolidation reversal pattern. Perhaps there's a pivot of some sort right here, but that's essentially all I'm looking for. Okay, just up and down the market kind of looks the same. Lots of similarities here. Lots of similarities. Some assets have put those 3 waves in a zigzag manner, where the counter to this respects the 0618 of that first move. So that's all I'm looking for. That's all I'm looking at, rather. Lido Finance, right? Talked about that the other day. In any case, the DXY is really what is not going to last forever in terms of its move to the upside. Okay, and this is what we've been looking at, and this is what we're going to continue to look at, right? I've been saying on this channel that the DXY is at resistance, and this is true. This was true, rather. Let's zoom out for a second. This was true right here, okay? And it's true again right here, okay? So the first time we said that, we did get our massive rejection. That was a big rejection, okay? Now, if this is the first rejection, this has to be an A wave, right? Same principles that we're always talking about on this channel. Every correction happens in 3 or flavors of 3. And every initial break of structure or any initial correction has a counter correction that you call a B wave, okay? And that B wave also comes in 3 or flavors of 3. This is what you're seeing on this chart, right? I love how simple it is, even though it can get complex in application. Just fundamentally speaking, like, the technical analysis is simple. It's a 3-wave initial break of structure, a 3-wave counter, and then what you have here is obviously a resistance level, okay, for about 3 days, because we're the 12th right now. For about 3 days, you have not been able to breach that level, okay? And so, once again, if you take a Fibonacci retracement tool from the top and the bottom of that initial break of structure, you see that the 786, which is typically your level, it's your minimum Fibonacci level. It's the minimum retracement for any flat correction, the 786 Fibonacci level. Okay, that's exactly where we've been finding resistance at the 786 Fibonacci level of this initial break of structure of this A wave, okay? And I've already labeled that, as you can see here. And this B wave just came in 3 waves right here. And right here, if we zoom in, we'll see that it's likely that we put in a consolidation reversal pattern. And as I always say on this channel, these consolidation reversal patterns are challenging to read. They're easier to read once they've developed and you can actually see them. But how they're going to develop, the size of each initial break of structure, because you have 2 degrees of AB basing, the size of each A wave and the size of each B wave, it's hard to tell. It's hard to tell, but you can still try. Rosalie says, is it the winter song at the background, Vivaldi, The Four Seasons? I believe so. I think this is Vivaldi, to be honest with you. I'm not exactly sure. I have so much classical music, Rosalie, that I listen to on stream, but I believe one of these has quite a lot of Vivaldi, and this may be the one. So this is what I'm looking at, right? So I dropped down into a smaller time frame, and I already proved that this level is the 786, and we've been butting up against this, and it doesn't look, just, if you look at charts enough, nothing here looks like a regular corrective wave where you're like, going and you're like, ooh, that's a consolidation for a move up, right? It doesn't look like that, nor does it look like, a regular flat correction where, you're just consolidating, intra-wave consolidation for another move up. This looks like a consolidation reversal of the distributive type. It looks like you're at resistance. So this is what I've been saying. The DXY is at resistance, okay? I've been saying the DXY is at resistance since we were at this first resistance, okay? And that was, last month. Again, there's nothing sexy about this analysis, because even though I can analyze, and even when I'm right, it's still boring, because when I said the DXY was at resistance, that produced a big rejection. We still didn't have a huge pump in the cryptocurrency market, right? Do you see how no matter how you slice it, even when you do get quite accurate in your analysis, there's no escaping patience. There's no such thing as a profitable and effective high win rate trader without patience. No matter how you slice it, you can have all the answers in the world. You cannot move the market. You can't move it. I would have loved it for it to pump during this rejection of the DXY, right? It's likely to pump during this rejection. Why? Just basic. This is my basic understanding of, fundamental analysis or technical analysis. An A wave, a B wave, a pivot, and then an impulse. There's nothing else. There's nothing that we're waiting for. So basically, we're at an inflection point right here. And that inflection point in and of itself has taken days. Okay? So just zooming in, you can see the characteristics of rejection, the characteristics of what an asset looks like at resistance. Okay, at resistance, it's trying to make a higher high, it gets rejected once. Okay, that's your initial break of structure. Whoops. Okay, it tries again. That's your counter. Okay, so that's your counter. That's your first degree of AB basing. That's your A wave and your B wave. Actually, you can say, and I don't know that this is true, but it's possible that, let's see. Yeah, I would say that this is your A, and this is your B. Okay, so I'm gonna stick by that. I'm gonna say that this is an intra-wave 4 correction or something like that, or that this was an ending diagonal or something like that. Okay, so I'm just going to stay with that initial break of structure, targeting wave 2 of the extension, the 5th wave extension. I like that. Okay, let's redo that. A, B. And that this may be the second. I don't know. This may be small a, this may be small b. And right now you may be putting in a pivot. I don't know. I don't know. All of this may be small a, what you're seeing here. And then you may still have to get a small b. I don't know. And again, the point is, when you're reading these corrective patterns, when you're reading these AB bases, the point is not to know necessarily. You just want to read it with some degree of confidence, right? Just, it's likely, it looks like that's what you're putting in. So we're just going to wait and see. But the very important point, the operative term, is that the DXY is at resistance, and it's been at resistance. It's at resistance on a high time frame, mathematical resistance. It's at the 786, and then from a price action or sort of an Elliott wave count, it's putting in corrective waves, which can either be one of two things. It can either be an interwave correction. It's unlikely that it's an interwave correction given this rising wedge, which is characteristics of ending diagonals, or it can be that it's likely, just probabilistically, at resistance, putting in a consolidation reversal pattern for a move down. Okay, when we're going to get that move down, not exactly sure. Now, given that the DXY seems to be complying, we should see Bitcoin and accompanying crypto assets do exactly the opposite. Given that the DXY is inversely related, inversely proportional to Bitcoin and crypto assets, if it's at resistance, high time frame resistance, and about to go into impulse, right, that C wave, then crypto assets should be at support, right, and about to go into an impulsive move. Okay, so that's what I'm seeing on a high time frame looking at crypto assets. Okay, like a lot of things, I've been saying this for a while, and I know it's kind of annoying, but it still stands. You have a nice rounded bottom, and that's still true. You have a nice rounded bottom in this 100+ day, 120 day range that you've been in Bitcoin, and you're at support of this 100+ day range, forming a rounded bottom on a large range. That is very, very bullish. I'm not going to count the Elliott waves, but let's just look at the momentum indicator, which is completely oversold. So it's very likely that you're at support. Same thing with Cardano. You have this no rounded bottom in Cardano, but you are at support of a very long-winded consolidation reversal pattern, potential consolidation reversal pattern lasting 150+ days. Yeah. Same thing with Dodo. Dodo's a little more easy to read. It's been there 150+ days. You have this long range, and you're looking to move out. And if you go on a smaller time frame, you can see you're forming a base. Okay, and again, this is all what's the word? It's all fractal. So you can see here, Dodo's put in this move right here, which is a mini version of what you saw on the daily time frame. We're on the hourly time frame right now, but you can see these AB bases, they're universal, right? You can see another one right here. It's likely that if we do move, it's going to be as a result of AB basing in this range and then moving up and out of this. You can see it on a small time frame across the board, right? On the small time frames, it's a microcosm of what you see on the larger time frame. Okay, 2 degrees of AB basing, and again, it may look a little different in some assets than others. because remember, AB bases, they're corrective patterns. So you can put in a flat correction and then a counter flat correction, or you can put in a flat correction and then a flat correction that only goes this, to the 0.618 of this, a zigzag and then a flat correction, which goes to only to the 0.618 of this, right? There's a lot of different variations. So yeah, on the small time frames, this is what you're looking at. Ethereum is looking quite bullish because, once again, it's put in what I just showed, a zigzag where you have a 5-wave move that's corrective, and then a subsequent flat correction that's respecting the 0.618 of that subsequent zigzag. Yeah. This is a flat correction, right? Small time frame. Again, small time frame, but don't lose sight of the fact that we've already accounted for the large time frame where you're in this 150 plus day channel and you're holding it, structurally very sound. You're waiting for that big move. Okay. And here RSR, let's see. Maybe this is the top right here. Wouldn't be surprised if, well, I don't know where to pull it from. Maybe you're pulling it from here. Maybe you're pulling it from here. Not exactly sure. But these are large time frame ranges that you've held and you've been holding for quite some time. On the small time frames, what does it look like? It's not going to always look the same, but you're likely to see some ranges. Here you see another range. Okay, another AB base. Right? You're putting in, and what you saw in Bitcoin actually this morning was very, very strong. A wave. Where did you see that? This morning. What was it? I'm sorry, I'm trying to think what I was looking at. No, it was this right here. This strong move up here. And then pretty much everything here is a reaction. That's wave, counter wave. Wave, counter wave. Yeah. So yeah, that's what you're looking at. We can go down the line, but essentially it's the same stuff, guys. It's the same stuff. Lido Finance, again. Wave, counter wave. I'd say wave. I'd say this is the whole counter wave. And then there's a wave here, and then there's a counter wave there. Does that make sense? Wave here, counter wave there. So that's your 2 degrees in Lido. But essentially you have your ranges on the small time frame. You're putting in AB basis. And you just see it over and over and over and over again. And it's annoying. It's annoying to read, especially if you're doing it for months and months and months on end. But that's just how it goes. Yeah. So that's pretty much my update. Let's see. Let's look at this move together. It looks like this is the end right here of this. And the question I always have is this going to be the range that takes us up and out and finishing, not taking us to another corrective wave, but is this going to be the range that finally ends the sequence of corrective bases? We'll see. We're at support, so it's gotta be soon. It's either we break support, which is unlikely. We break high time frame support, right? And we create lower lows. And here you can see Either we break this 150 plus day range to the downside, and some people will say, oh, it's already broken. Not really. It's wick beyond. That's nothing. To break would be a significant break, retest, and then continuation. Okay, either we break it or this is it, and we continue. We test the tops and then go up and continue. So we'll see. It's got to be. It's literally on the precipice. And why are we so close? I know we look at the DXY and say the DXY is really close to rejecting completely from this resistance, and this should be our move down into impulse, okay? Because as I showed, there was an initial break of structure. This is a counter, and then this region should be your kind of AB base, consolidation, reversal, distribution out of this and continuing into the C leg or the impulsive leg of the entire ABC correction that you're putting in right now. So this is it. So both the DXY looks like it's about to go impulsive, and Bitcoin, as well as the rest of the cryptocurrency market, looks like it's about to be impulsive. But obviously, one's going down, the other's going up, as is expected. They're inversely correlated. So it's like it's very close. It's very close, and we've been close for quite some time. Okay, you've been looking at this for months now, and waiting for something for months. Okay, it's close. Don't give up. Don't give up. And I tell that to myself as well, because we're very, very close. We're very, very, very close. We're closer than we are, than you think, than some people think, than a lot of people think. But a lot of people are not going to get this because a lot of people don't have the patience for this. A lot of people don't have the perseverance, to pay attention, to continue to dollar cost average into their positions, to continue to expect a move from crypto, because for them, waiting 50 days, 100 days, 150 days, 200 days for a move is like, it's unthinkable, But, a lot of them will be surprised when it does start to move and they see positive price action, and we're making 30%, 50%, 60% moves in a day on and day out, day in and day out. That's when they'll start investing, and then we'll hit resistance, and they'll be a little bit disappointed because we're not going higher. That's just the cycle. That's the market cycle. So yeah, nothing lasts forever, my friends. Nothing lasts forever. This downtime in crypto being down and going sideways, that's not going to last forever. And your challenge, your job, I guess, as investors, as people that are speculating on this market, is to figure out when that's going to be, and to be prepared for when it does end. Just be prepared for when it ends, and when we start making a lot of big moves to the upside in crypto. So that's it. Is this gonna be the big bounce? Maybe, maybe not. I don't know. But we're at support, right? It's gotta be. If this isn't the big bounce, I'll say this much. Just looking at Cardano, and I'm particularly interested in Cardano again because I have a massive position in Cardano. If this isn't the big move, then there is no big move coming. Because, as you can see, we are already wick below support. And this support is a support that has lasted now. I'm trying to find my ruler. I don't know why I can't find. Oh, here it is. I'm goofy. This support is support that has lasted now for 154 days. Okay? So either we break this or we bounce. There's no in between. There's no going sideways right here at this level right here. It's either we break or we bounce. It's now or never. And it's been now or never for quite some time, for some days, right? Your momentum indicator is completely oversold, but you've been oversold twice before. Third time a charm, are you going to triple bottom on your momentum indicator? We've seen that before. So I wouldn't be surprised if we bounced from here. Okay. Same with Bitcoin. Completely oversold. It's now or never. You're at the base of this 100+ day support. Either you break through or break down, or you break out. You know, there's just so long that you can go sideways and continue to maintain this nice rounded bottom, designating a macro low. Yeah. So I'm hopeful. Am I annoyed? Absolutely. Am I frustrated? Absolutely. Am I tired? Absolutely. But that's just the market. And, you know, when you do make life-changing money and you're able to really take massive profits and people tell you you got lucky, then you just look at them. Because they weren't here for these times, these difficult times where you got to monitor your positions, you got to pay attention to the market. Maybe you want to invest a little bit more every day, you know, if you get a bounce at support, or, you know, whatever you're doing, however your investment thesis looks, you know, you had to do a lot of work. This was tough. This is tough. I want to say this was tough because I want this to be over like, you know, anybody else, but and I think it is coming to an end very, very soon. I can't say when, but I think it's very, very soon, because we're at macro support in crypto and we're at macro resistance in the DXY. Okay, don't know exactly what this is, right? Hourly time frame overbought, 4-hourly time frame oversold, but it can stay oversold. Daily time frame overbought, or not yet overbought, but we're about to cross bearish. Weekly time frame overbought, about to cross bearish. Monthly time frame overbought, been so for quite some time, about to cross bearish. So yeah, soon, very soon, very soon. Stay in there. All right, that's pretty much it for me, guys. Hope this was helpful. Hope this was useful. Like, share, and subscribe if you haven't had the chance. If you don't, that's fine. Dislike if you like. I don't care. To be honest, I don't care. I just want this bear market, this consolidation to be over, and the bull market to start in earnest for Bitcoin and most currencies. I know some assets have already gone into their bull market, like XRP, maybe reserve rights, but most haven't. Okay, most haven't. All right. So yeah, that's it for me, guys. Take care. I'll talk to you tomorrow. Have a great Wednesday. Bye.